Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, December the 2nd. Well, the S&P 500 and the Nasdaq rose a little this morning, lifted by gains in consumer staples and utility stocks, while the Dow was weighed down by declines in bank shares. Industrial and bank stocks have been the biggest gainers of a post-election rally, as investors expect these sectors to benefit the most from President-elect Donald Trump's policies. The jobs numbers came out this morning from the U.S. Labor Department and showed 178,000 jobs were added in the public and private sectors in November. This compared with economists' expectation of 175,000. The unemployment rate dropped to a more than 9-year low of 4.6%. However, investor reaction to today's report was muted as many think the markets have already priced in a rate hike in December. Traders currently see a 92.4% chance of a rate hike this month, according to Thomson Reuters, and of course if it takes place, that rate hike would be when the FOMC meets on December the 13th. And with that bit of news, let's go on to 3 charts that could give us some insight into the week to come. Now, first of all, we're going to look at a daily chart of our S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely tracks our S&P 500 index. As we look at this chart today, we see that when I captured it, price was at $219.81. That's about $21.98 on the S&P 500 itself. Now we know that it had a new all-time closing high of $213.35, or about $21.33 on actually last week on November 25th. Now, this all-time high is great. What I see here is that price is trading above, obviously it would be at all-time highs, above its 20-day moving average, the red line, above its 50-day moving average, the green line, and above its 200-day moving average, the black line on this screen. And all of these are simple moving averages. Again, we know the SPY came up, S&P 500 came up, made this all-time high, and now it's moved back down a tiny bit on profit taking, and as I said, back down here at the 219 and change area. This is actually support from our August highs back here. What was resistance can become support. It is right now if the SPY can stay above this 219 line. If it cannot, we move down to, there's more support just below 218. That would be about 2180 on the S&P 500 itself. You see, these were recent highs back in September. Then, of course, we have more down at about the 215 zone from October highs. We know we took this big dip before the election down to nearly 208. Now, should the SPY fall below 208 or 2080, excuse me, on the S&P 500, of course, that would not be a promising sign. There's nothing to say right now that this will happen anytime soon, but we do want to watch all these potential levels of support. Support translates into buyers. We want to watch these potential levels of support as we move through certainly the end of this year and into next year. If we look at the RSI here, the 14-day RSI, we know it became overbought as it would, traveling up to the 70 line earlier in November. We know that. It's tapered off a little bit with the profit taking that has come in. Now, as we look toward the Fed announcement on December 13, there's something else that's happening before that I want to talk to you about. This coming Sunday, Italy is voting on a referendum. If the people in Italy vote no to downsize their government, it's possible that their premier, Matteo Renzi, said that he might, well, he's more than might, that he might actually resign If that happens, that will throw a lot of Italian banks into we'll just call it a bad place. And of course, it could affect European banks. And of course, nowadays, everything is global. That affects us. So we just want to watch those Italian elections, that Italian election or referendum, I should call it, on this coming Sunday. Otherwise, though, the good news is, as I've told you before, the best 3 months of the year for profiting in our market are generally November, December, and January. And if we want to, if we're especially good this year, perhaps the market Santa Claus will bring us a Santa rally before the end of the year. Now let's go on to our next chart here. This is the PowerShares QQQ. This, as you all know, is the exchange-traded fund that follows the index called the Nasdaq 100. These are the top non-financial stocks in the Nasdaq stock markets. Some of these big guys are Amazon, Google, Microsoft, Intel, Netflix, Facebook. You know those usual suspects. These are the big momentum stocks by market capitalization that really tend to move the Nasdaq 100 around. Now, as we look at this chart today, it was trading, the Qs were trading at $115.58. This high was made up here. This pretty close to an all-time high was made on October 24th at $119.65. You can see here how the Qs have been fooling around above their 50-day moving average. They made a wonderful move from the Brexit lows here. The Qs were just very dramatic. Wonderful move. Trading at quite a high discount to their 50-day moving average through July and August into September. Then we had the move down when the markets thought that the Fed was going to raise interest rates. That could have been actually back here. But what I see here, if you forget all the news, if you forget the events going on and just look at price, after all, price is the end of the line. That's where the buck stops, is at price. If we look here, we can see that the Qs had a wonderful move into the beginning of the fourth quarter of this year, but then started losing some of their mojo here, especially before the election, a little bit down here in the end of August, September, then especially before the election, and then up and then back down again, and up and back down again. So this is not the most positive pattern on Earth by any chance, and I'm going to be keeping an eye on it. The Qs made a low yesterday of 115 and change. Again, right now they're at 115.58. So I want to keep an eye on this level here. This could be a buying opportunity. If the Qs can hold 115 into next week and start to rally again, perhaps it's a buying opportunity. Or if they have to move back down to $113.75, which is this blue potential support line, then that's okay too. Could be a buying opportunity. However, if the Qs can't maintain altitude above $113.75, just below 114 here, then I will not be so anxious to jump back into some of these big tech stocks. So right now, we're seeing how much strength the Qs have. Will the buyers, the dippers come in, or will they not? And a lot of it we can tell by watching volume in the coming week. Our final chart today is a chart of the iShares US Telecom ETF, the IYZ. Of course, this is also a daily chart. I'm watching the IYZ, the AT&T, Verizon, the big telecoms sold off. They're kind of like bond-like stocks. They sold off in the face of potential rate hikes, but they sold off pretty dramatically. I've been keeping an eye on AT&T and Verizon. They've rallied pretty dramatically here recently. Now I'm watching them. Actually, they're big tech stocks as well, and people don't think of them that way. In the IYZ, top components are AT&T, Verizon, T-Mobile, US, Level 3 Communications, Sprint, And you know these companies. I'm wondering here if they might become more attractive in the upcoming weeks. Now, the IYZ, as I captured it today, was trading at $32.09. As I said, it fell pretty dramatically, down to $29.31 in the first part of November, then rallied up here pretty hard to the recent high of $32.75. If IYZ can stay above all three of these moving averages, particularly the 200-day and the 50-day, which are now coming together under price, if it can stay above these two lines going into next week, and if the IYZ can begin to rally, it might be something that would be worth keeping an eye on as a potential longer-term trade. Again, I would not want to hold shares in this if it traded below or rolls over and moves below, say, 31.50, right below this 50-day and 200-day moving average. But above 31.50 or so, I'm happy to maybe partake in it a little bit if it shows signs of moving higher. Potentially, it could move back up to 33 and higher. And these are this is not a real hot dog ETF or companies. These can be steady eddies in the good times. Okay, now on to next week's economic reports. But first, please join us on Monday, December 5th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, not a problem. Our recording is sent to all of our members a few minutes after the session ends. And now for the coming week's economic reports. Again, this Sunday, in Italy, citizens will vote for a referendum in which a no vote could rock the European markets, its banks, and spill over to us. So let's hope that doesn't happen. On Monday, we have ISM services. On Tuesday, not much going on. Wednesday, we have our usual crude inventories. Thursday, we will have our usual jobless claims and natural gas inventories. Friday, we get the Michigan sentiment numbers. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.